Anthony, I'm dreaming of going to Florida and visiting the Diplomat today.
You are in Florida.
I wish.
I'm Anthony. Welcome to No Vacancy Live. That's my friend Glenn.
You're watching the #1 show in hospitality.
Hey, everybody. Welcome to the one and only No Vacancy Live. I'm Glenn Hausman. That's Anthony Melchiori. Thank you so much for joining us today. A little note, this is actually, we recorded this a couple of hours ago because of our schedule, so we won't be able to respond to any comments today. But Anthony, I'll tell you what, I love Florida. I love that because it's so much warmer than it is up here right now. You know what I'm saying?
I love curtains.
Who doesn't? All right. So today we're going to get right into it because we've got a great show. We're going to be talking with Sean Hehir, and he's the managing partner, president, CEO of Trinity, and they're managing over $5 billion worth of expenses right now. Incredible properties such as that Diplomat, the Westin Maui, Hilton, Los Cabos. I could go on, but let's just bring in Sean and get right to it. Sean, how are you today?
Doing great. Thank you, Glenn. How are you doing?
Really, really wonderful. Thank you so much. And of course, Dr. Producer Suzanne is being very helpful behind the scenes and saying it's 62 degrees there. So it's more than twice what it is up here in New York. Sean, when I got into the hotel business, it was like 1996. I was working for Hotel Business Magazine. I think you were at HVS at the time. By the time I left hotel business in 1998, you started this company. That's pretty cool. You've been at it for so long. Before we get into where you are today, how did you get started? Because we really love sharing a little bit about, how people can make things really happen for themselves in their lives.
Perfect. So as you're right, I was at HVS. Steve Rushmore took a shot on me, which I'm incredibly grateful for. But there were a number of headhunters running around in that time. The REITs were going crazy. And I got a call from a headhunter who said that Chuck Feeney had started a real estate company based in Honolulu and was looking for an analyst.
Right. I remember that.
Chuck Feeney was a big name at Cornell, where I graduated from. So I rushed over for the interview. It wasn't Chuck Feeney, but it was Chuck Sweeney. But he had started a real estate company based out of Honolulu, and they'd bought a luxury chain of hotels and some other things, and took a shot on me and hired me. The next thing I knew, I was in Honolulu, and I've been with the firm ever since. I took over running it about 13 years ago, and it's just been a great run.
Yeah, that's incredible.
Yeah, and it says a lot about the company that you guys survived COVID, because a lot of those companies haven't survived.
Well, COVID was a very interesting time. I learned going through 2008 that if you have a small team, you can't walk and chew gum at the same time. So you either protect the assets you have or you go the offensive. We protected our assets and missed a great buying opportunity. We changed that. So leading into COVID, which we did not know was coming, we had a big enough team that we could not only protect our assets we had, but we raised our first fund and we went on the offensive buying hotel and resort assets.
That's great. And it's one of those things. I remember, Anthony, you remember when we were talking in the depths of COVID that the real winners are going to be the ones that are going contrary to everyone and making those investments. Our friends over at MCR, for example, have done an amazing job doing that. And it's great to hear that you're doing that as well. It must have been a pretty gutsy thing, though, when everybody out there is panicking and saying, don't, and then you're like, we're going for it.
It was a scary time. I mean, January of 2020, I don't think I'd heard the word COVID or the word Zoom.
Right.
And by March, we had to close all of our assets. By September, we started raising our fund, all on Zoom. Had our first closing in September, our final closing in June.
Wow.
And it was an interesting time, but we could see the rumblings of this revenge leisure traveler coming back. And we knew that we had the right assets in the right markets that would, that would recover well. Right. And fortunately, we were correct with that thesis and the portfolio that we've assembled.
That's pretty cool.
So nowadays, obviously, the question is, after last year, people couldn't find funding in a safe. Nobody can find money anywhere. Where are we going? If, the Fed's maybe drop interest rates. I don't know what they're going to drop, But where do you think funding is in 2024, or where will it be?
Well, we know on the equity side, there's tremendous capital sitting on the sidelines.
Right.
The Blackstone, Starwood Capital, etc., have raised incredible funds. But on the debt side, there are challenges. With the regional banking crisis, there is not as much liquidity on the debt side. I think we're going to see a lot more people looking at preferred equity, mezzanine loans, etc. There are borrowers or owners out there that have maturities coming up, or need to buy interest caps, or need to pay down debt, etc. So we'll be looking in those areas as well. But when you come across irreplaceable hotel real estate in smile states that are destination-oriented hotels which fit our sweet spot, we will be very active trying to acquire those types of assets going into 24.
And what do you think, I know this may be a question you can't answer, but what do you think of the impact of what's going on in the China economy right now, where they're going their own recession? How's that going to affect real estate throughout the world?
Well, I think, they have been a great buyer of real estate around the world. They've been a great investor around the world. So obviously that's one less group that will be as active. But in the US, we take, for example, Hawaii, which is where Trinity was started. The Chinese traveler was a very big part of Waikiki, and to a lesser extent, the other islands. They haven't come back yet. The Japanese traveler hasn't come back yet. But we have had a lot more travel from the West Coast. So Hawaii is doing fine from that perspective.
Sean, I was there in the summer of 21, and from what I paid, I could tell they're doing fine.
Well, when you go to the islands of Maui or the Big Island, I mean, the rates, it's reflective of the product. So it's terrific. But we haven't seen the foreign tourists come back into the continental US yet the way that we would like to see them. There's been a lot of domestic traveler with US citizens, but with the weakening of the dollar, we expect to see that start to happen more frequently. I'm in Miami right now.
Right.
Obviously, we're a great beneficiary of not only European travel, but also Latin American travel. And we're starting to see that coming back, which is really exciting.
Are you at your wonderful hotel, the Diplomat?
I'm not at the Diplomat. I was at the East the other night for dinner with my family. But I'll be up at the Diplomat later this week.
Our producer Suzanne and a friend of our show, Sarah, who's a good friend of ours, they were at the Diplomat not too long ago, a couple of days ago. And when I was a kid, there was a hotel, like a motel, called the Diplomat. Is the Diplomat on that land? Is it the same hotel land?
The Diplomat, as you see it today behind Glenn, was rebuilt on that land. So as you look at it today, the tower is 1,000 rooms, connected to its own 200,000-foot convention center, connected to another 10 acres across the A1A by a sky bridge.
That's where you have the marina and a couple of restaurants.
Yeah, I was telling Glenn when I was a kid, I had a lot of Diplomat towels. We'll just say I grew up in Brooklyn, right, in an Italian neighborhood. We had friends of the family that spent a lot of time at the Diplomat.
Unfortunately, Sean, I think that's why they had to sell. Because Anthony's friends took all the towels over there. But this has been one of the most remarkable redevelopments. Do you remember what year that was by any chance?
I believe it was around 2001.
Oh, that late. I thought it was in the 90s. All right,
but I could be wrong.
It's just amazing how gorgeous it still looks today, brand spanking new, for sure. So we've been talking a little bit about the overall financial environment. And one of the notes I just took to myself here is that money sitting on the sidelines, Sean. And this is something that's been plaguing me for my entire career. I swear I started hearing that term in the 1990s. My entire career, money's been sitting on the sidelines. What's the deal with that? Why is it always on the sidelines and never in play? And how does all of that kind of work? And why is all this development still going on if no one's actually investing in anything?
Well, it's interesting. I think this year we will see a lot of activity, and unfortunately, I'm part of the herd. We invest somewhat on a herd mentality basis, but you'll see one big move, and a lot of investors will follow. And hopefully, this is the year. We've gone through 3 long years of COVID. We've gone through a long year of interest rate hikes, and if we do start to see rates come down, I think that'll really have a positive impact on investor sentiment.
Yeah, and Glenn, no matter what's going on in the economy, it's going to be on the sidelines, going to be in play, on the sidelines in play. But that's a great question, because that's a question probably everybody wants to ask.
Yeah.
But it's listen, these companies are very strategic, and it goes in at the right time. When I work with Tishman, they don't do a lot of deals, but when they do them, man, they're big.
Yeah,
they're very big.
And you take Blackstone. They make big moves and they make moves, and they've been quiet on the hospitality side, but they're great investors when they move.
So, Sean, I'm not familiar with your entire portfolio. Going forward, are you looking for those real high-end classic assets, such as high-end resorts and stuff like that, or are you looking for other things? I think you also are working with the W Hollywood and great properties like that, right?
Well, when we look at what our investment lens is, if you will, we focus on the Smile States: Florida, Texas, Arizona, California, and Hawaii. We focus on more destination type hotels, which oftentimes are resorts, and they're 400 rooms and larger, and they're all brand managed.
Right.
So we work very closely with Hilton, Marriott, Hyatt. We're looking to expand those relationships, and most of our assets fit within those. And being destination hotels, we not only have the benefit of the leisure traveler, but we have the group traveler. We're seeing a lot of corporate demand now because with people working from home more frequently, companies are having more offsites and doing them in the types of assets that we own. And then some of our assets that we bought pre-COVID, like the Westin Maui, like JW Marriott Desert Ridge, like Grand Lakes, have been fully renovated. So they are poised and ready and are welcoming guests in all of those segments.
Yeah, that's so all right. So when you're thinking about all of that, why do you think that these types of properties are going to really be continuing successfully in terms of profitability, when we're starting to sense that with the expenses climbing up, and we're starting to feel like maybe there's a ceiling on what you could charge guests? How are you kind of negotiating that middle to make sure that you get the return on your investment that's necessary?
We have what looks like compression occurring at a lot of these properties. So if work from home is here to stay, people working from home Mondays and or Fridays, that makes every weekend a 3-day weekend. So people are traveling in general more on the leisure side.
Right.
On the other side, as I mentioned, with the office footprint shrinking and people working from home more and the need for more offsites, that's another demand segment. Then you've got the true groups and so forth that were not able to meet during COVID. They're coming back and there's very robust bookings. So you have a lot of compression going on and demand for these types of assets. Now, we were the beneficiaries as an asset class during this inflationary environment where, because we lease up every night, we were able to increase room rates and food and beverage prices accordingly. Is there a ceiling? We haven't seen it yet, but of course you get to a point where it just does get too exorbitant. But right now these assets are performing well, and there's still a lot of pent-up demand coming out of COVID.
So I think what I'm hearing then is a story very different than maybe 18 months ago, where everything was topsy-turvy and weekdays were kind of quiet and the weekends were really robust. It sounds to me, Sean, you're telling me a story now that 7 nights a week, you have different types of drivers that you're really running on all cylinders, and possibly a way that some of these properties have never run in recent history.
Yeah, if you look traditionally in hotels like the Diplomat or these group-oriented destination-type properties, Thursday nights and Sunday nights were your weakest nights.
Yep.
Now, I wouldn't say they're our strongest nights, but they're solid nights, and that's as a result of a change in the customers' travel patterns.
And how are the room design and the floor plans changing based on this need for office space plus, a hotel room? What are you doing and when you're either taking over or building and looking at that? Is there a separate area for maybe office space for people to rent out while they're there? What are you guys thinking?
Well, I should clarify, it's not so much the office space, but it's more the companies that are having more offsites to bring their people together. So they're using the meeting space. But when we're designing rooms, we need to be cognizant that you might have 1 or 2 people working from there because they don't work in an office Mondays and or Fridays, so they're working from their room. So the appropriate desk space, the appropriate Wi-Fi, etc. The other with these hotels, when you've got leisure and group guests together, I often say there's nothing worse than showing up and you're the only person without a name badge and you feel like the uninvited guest to a party. So we need to make sure we have bespoke spaces for the leisure guests, and we create these lounges, and we create this whole cabana program where people are renting cabanas. The other part is, making sure that the food and beverage offerings are really up to date. You don't want to be eating in a generic hotel restaurant. You want to be eating in a restaurant that, be it a steakhouse or Italian or a fish house, that is bespoke and feels like it's an independent restaurant. And we spend a lot of time, concepting those ideas as well.
And that's so essential. And this comment is for our younger viewers out there. You really need to have food and dining concepts that appeal to folks outside those staying on property, right? In order to be fully profitable and not be a loss leader, you got to get that neighborhood in here. So when you're talking about building concepts that could be standalone concepts, how do you go about thinking about that? Because I've never asked this question before, because a hotel must have some specific types of foods in order to satisfy a guest, but you also want to be able to appeal towards people out of the property that might be more curious or looking for something a little different. So how do you balance those needs to create something that's really profitable on all sides?
Well, I have to give a lot of credit to my partner, Greg Dickens, because he's been at the forefront of concepting all of this. Yeah. I'll take Grand Lakes as an example.
You mean Grand Lakes, Orlando?
Grand Lakes, Orlando.
Yep.
We brought in a chef called John Taser on a consulting basis from Dallas. He owns the Knife Steakhouse in Dallas. We created a concept in Grand Lakes called Knife and Spoon. Phenomenal aged steakhouse. And he's on a consulting assignment. He's there from time to time, but using the hotel staff. It has such an independent feel now. It's not only enjoyed by hotel guests, but also by neighbors in the surrounding area. It earned a Michelin star for the restaurant. And then we have a separate restaurant at Grand Lakes that's more Italian focused. We have great concepts in Hawaii, great concepts at Desert Ridge. And we're doing the same at W Hollywood. And
wait. You have the Marriott Desert Ridge as well?
Marriott Desert Ridge, yes.
Well, we were there twice last year for the lodging conference and for the iCree event. Let me just stop right here and just say congratulations on that renovation. It looks fantastic. And I enjoyed the newish water park with and hanging out in that lazy river. So thank you.
You'll have to go and check out the water park and the lazy river at Grand Lakes as well.
Well, let me tell you, I have been to Grand Lakes, and this is the part of the conversation where I have to praise you for that incredible lobby at the JW, because those are the types of lobbies you don't see being built anymore. And I feel like that was the last of its generation. Again, I don't remember when it opened, but I feel like it was in the early 2000s.
Yeah. No, it's one of my favorite hotels. It's fantastic.
Yeah, for sure. So, moving forward, how do you think that these, for real, how do you think these interest rates and stuff are going to affect further development? And if it's going to squelch further development, how does that work advantageously for you? And contrary, if everyone's in it, how do you kind of handle that market if everybody's trying to bid on properties?
Well, it's hard enough for the types of assets we buy to get approvals, to get financing, etc. I mean, you take the Diplomat. I mean, that is truly irreplaceable real estate.
Right.
Where can you assemble 10 acres on the Atlantic coupled with 10 acres on the Intracoastal? It's virtually impossible today. And then how do you capitalize it? I do think that interest rates coming down will spur development for the lower chain scales like mid-scale and budget economy, etc. But for these types of assets, and then you take South Florida, you're competing against apartment and condo economics. Yeah. So we don't see these types of hotels being built. But interest rates coming down, I think will just have a much more positive impact on both the investor and the consumer, and will continue to spur travel and investment.
So when you take a hotel like the Diplomat, do you guys consider maybe going with a soft brand as a driver for reservations, or does the Diplomat stand by itself?
And let me just add, I'm still not used to not using the name it used to be with the brand that it was associated with. It was so ingrained in my brain. Sorry, go on, Sean.
No, well, early on when we were first looking at the acquisition opportunity, we started talking to Hilton, and they have a brand called Signia. And
Signia is a relatively new brand. I don't even think the first one is open yet, or it's just about to open. Maybe Indianapolis, maybe not. I don't really recall, but it's a meetings-focused brand. Sean, please continue. Sorry.
Correct, and we have a close relationship with Hilton as we do with the other brands. But when we looked at South Florida, we realized that Hilton did not have an asset of this size, and we would be the beneficiaries of that. So we brought Hilton in at acquisition. It currently is a soft brand, a Curio, as we complete certain components of the renovation. And then it'll flip over to a Signia, but the Diplomat name will be prominently part of that branding because it is so well known and so synonymous with that location.
Well, it has to be. I mean, you'd be a fool to throw out 80 years of history or however long it's.
So bring people that don't have the maybe education and history that we all have here, as far as why soft brands are important. When you take the Diplomat, right? So you have a couple things going for you. You have a great company, your company. You have the great name, Diplomat, the great branding, and then you have an iconic location. Why would you then give, and again, I know some of the answers, but I just want our audience to understand, why would you then go and make it a soft brand when you have those three things, which are the most important things in any business, let alone a hotel?
Well, what's important for us for this type of hotel is to get into the Hilton system. With their group booking, with their reservation, with their management team, and all of that. They are so well experienced at managing and helping reposition these types of assets. So you do that. And, they'll say, look, right now it's not right up to the standard to make it a Signia, but we'll make it a Curio, so it'll be the Diplomat. I'm going to get in trouble for giving the branding wrong, but let's say it's a Diplomat, a Curio Resort by Hilton,
right? For
example. So you get the Diplomat name in there, you get into the Hilton system, and you still have the Hilton tag along if there are people who don't know what Curio is.
Right.
And so you benefit from all of that. And even once it's a Signia, and I forget whether it's going to be the Diplomat, a Signia Resort, or Signia Diplomat, but you'll have both names in there, but you're in the Hilton system with their group booking, with their reservations, their marketing, their management team, which is so important.
Yeah, I agree with that. I feel we're talking too much Diplomat right now.
Yeah.
And I want to make sure we cover, before we wrap up here today, some of your other properties. You said you're in the Smile States. I never heard that term before, believe it or not. But I love that term. So how do you figure out what properties are even potentially going to be for sale? Because one of the things that I commonly hear in our business when I'm going to all of the major conferences, and we'll be out at Alice at the end of the month, is off-market deals. So how do you find those? How do you cultivate them? And how do you actually move forward and get in before others do?
It's across the board. I mean, we met Gary Barnett a couple of years ago. He owned the Four Seasons Las Colinas in Dallas.
Right.
And that was an off-market deal. And it was the Four Seasons. He had negotiated that the management contract would be available to change. And we contacted our great friends at Marriott and agreed that it should become a Ritz-Carlton. So again, it started off as a soft brand when we bought it and Four Seasons left. And then it's flipping right now over to a Ritz-Carlton once we've completed key components of the renovation. But when you're active in the market, as we all are, and you know which markets you like, which markets you're not as in favor of, which types of assets.
Right.
You not only work with the brokerage community, but you also get a sense of who the owners are. And so you continue to have a dialogue. And if there's an opportunity at the right time, it comes together.
And I suspect you're at the point of your career where if you don't know somebody directly, you know somebody who knows somebody, and you can kind of make that introduction and then go out to dinner and feel them out and that kind of a strategy, right?
Yeah, and Trinity is 40 people today. We have offices in LA, in Honolulu. We're opening an office in Miami, and we just opened an office in London. And so not only with the team of 40 people, but with my partners, with Lee Nybart and Greg Dickens and Ryan Dunn, they're very active in the industry as well. So they, myself, our entire team, we're constantly coming up with opportunities or coming up with strategies and ideas as to who we should be talking to and so forth.
That's pretty cool. I know it's a little bit early. We're 3 weeks out from Alice, but what do you think the sentiment is going to be with the investment community when we get there? And how do you see using that to your advantage?
I think it'll be a lot more positive than last year. I think, when you look at how the market rallied, in the last couple of weeks of December, I'm talking about the stock market, and just the conversations I've been having, I think there is renewed optimism. There is time for people just really want to get back to work. And as we spoke about earlier, so much capital on the sidelines, and it needs to be put out.
But Sean, every 4 years, I start to hear this. Well, we don't know what we're going to do because of the election. But in my 25, 30 years in this business, doesn't seem like any presidential election has ever really affected anything when it comes to hotel investments. So why do you think people still have that attitude? And, how are you approaching an election year with your thoughts?
Well, I'm never smart enough to predict an election. So I think I definitely stay out of that. Out of that business. But I think investors are always trying to figure out what could be the gotcha out there, what could cause things to go sideways, where are the issues going to be. And in election years, it's one of those where we probably get it right half the time and wrong half the time. So it's just constantly, and by the way, we never predict what are going to be the real issues. Like none of us that I know of saw COVID coming. Well,
no. I mean, Sean, Anthony and I were sitting in Las Vegas at a Forbes event in February of 2020, and they're like saying so-and-so couldn't make it from Macau. And we're like, all right. And then like 2 weeks later, everything fell apart.
No, and no, wait, suddenly the music stopped. And we saw when you look back, you're like, oh, that all made sense. This was coming. But we really don't predict the major issues that are coming.
And it's really interesting because throughout my entire career, everyone would be like, this is going to happen unless there's a black swan event. And there never was until that sort of thing kind of flipped everything in your head. So as we wrap up, what have you learned from the last 4 or 5 years? And how does that inform you going forward? Because I think we all took lessons from the craziness that we went through collectively.
So what I learned is the power of discipline. So the types of markets we were focused on, the types of assets we were buying pre-COVID and going into COVID, that really played out well. The power of team, having our team at Trinity we were able to be defensive and offensive at the same time. And then finally, the power of relationships and our investors, our lenders who really stuck with us through the darkest times of COVID when we were closing these super tankers. And so we're going to be more disciplined than ever about the quality of our team, the markets we're in, the investors we have, and who our lenders are. Excellent. And the brands, I can't speak enough for the hotel brands. I mean, they were phenomenal.
They really did a great job, and helping quelch pips for a while, and doing things to reduce fees. Some brands totally said don't pay us anything for a while. So it was a really positive environment considering the circumstances, and I think it really brought the hospitality industry together in a way that's going to affect us for a whole generation or so. Sean, any final words before we let you go, sir?
No, I just want to say thank you, and I'm optimistic going into this year, and I hope the rest of the community feels the same way.
Awesome. Well, thank you so much for being here. We really appreciate it. Just hang out backstage for a second so we could wrap up and then give you a proper goodbye. All right?
Awesome. Thank you.
Thank you very much.
And did I hear Sean invite us down to the Diplomat to do our podcast?
I'm pretty sure I heard that, but I thought I heard Hawaii. I don't know. I'm saying, but if you guys want to find out where we do wind up, why not follow us on Facebook, Instagram, LinkedIn, and of course, all shows are at novacancynews.com. And if you happen to be watching us right now, why not stop looking at our faces? Download the audio version wherever you get your podcasts. All right, everyone. See you tomorrow. Thanks so much for being here. And remember, you've got one life, so blaze on and
be kind to yourself.
See you later.